Welcome to Drill Down Earnings. We have the latest quarterly results from Facebook. The market is reacting to these in excited fashion. Let's take a quick look here. This is the business story behind one stock on the move. I'm Cory Johnson, the chief market strategist for the Futurum Group. Of course, Meta, the guys that gave us Facebook and Instagram, company we pay a lot of attention to. Just from an IT perspective, it's an amazing company. It's also one of the biggest and most profitable companies ever created in the history of all humankind. Or as Wall Street says, was it a beat or a miss? It was a beat. And Wall Street can go away. We can actually take a look at the business here behind the story. So the revenues for this company, fantastic in the quarter, $14.9 billion in revenues. Great operating profits to the point, and even their actual profits, $13.4 billion in the quarter. And the growth has generally been accelerating, a little less than last quarter, but 22% year-over-year growth. And that's with barely adding any users. They're adding users now at less than a 1% clip. They've got 3.27 billion global users, but daily active people, as they call them, whatever, active people, why not? But 0.9% growth in that. Nonetheless, the business continues to be more and more profitable. Ad rates are increasing globally for them. They saw 38% operating margins. And one of the reasons the margins continue to work out well is that they're able to keep their R&D costs under control at 27%. Yeah, they spent $10.5 billion in the 13 weeks of the quarter, but still, they managed to keep things a little bit kind of under control, I guess. And I think when you look at the R&D decline, and it has declined from sort of right above 30 to 27% of revenues, the pace of decline has declined. So I think we see what we're going to see in terms of what R&D is going to be. The real concern for this company, the only time this company has really shot itself in the foot, I mean, you can argue about privacy issues and that's a whole different story. But in terms of the finances and the way Wall Street has regarded this stock, when R&D expenses, when CapEx expenses went kind of crazy, especially when they're developing their Oculus goggles and Meta virtual reality, it was so expensive and the results were so de minimis. They remain de minimis. I mean, $350 million in a quarter, but still not given the expense that they've had in building this out. The concern about this company is that Mark Zuckerberg is going to go hog wild on CapEx and kind of ruin it for shareholders. And what we've seen in this quarter, and it was initial concern of the stock, might have reacted poorly to this number, $8.5 billion in the quarter is the third biggest amount of spending they've ever had in CapEx in a single quarter. And indeed, in the commentary in their letter to shareholders, in the press release, and as well in the conference call, which we'll get to in a second, they talked about increasing CapEx and bringing it up by at least the midpoint of CapEx by about $2.5 billion through the end of the year. But I look at it as a percentage of revenues. And in my models of percentage of revenues, it's down to 9%. It's actually the lowest it's been in many years. Even if you look at it as a percentage of net income, it's 26% of net income. Look, it was 80% of net income 2 years ago when the stock really got walloped. Now it's down to 26% of net income. So if it's 26% of the profits, it's a lot. But they say they're building for something different now, not just building for weirdo goggles for a metaverse, if that's what it is. But in fact, they're building for AI, something that a lot more people are using, and talked about the expense of their Llama 2 and Llama 3 and Llama 4 and Llama 5 models going out into the future. And that was kind of an interesting development. So initially, these numbers came out, the market didn't know exactly what to do with the stock, but eventually it traded up 7% right after hours trading, and 49% for the year, a fantastic return. But the expense going forward of AI is big. Llama 3.1 was trained on 16,000 NVIDIA H100s. The company says they're going to have 600,000 H100s or NVIDIA chips by the end of this year. That's a lot. That's expensive. That's concerning to investors. But from the lips of Mark Zuckerberg, what you hear is real excitement about what they're going to create with all that computing power.
And we do have this huge set of use cases already about people wanting to discover content and interact with their friends, and businesses reaching people, and all that stuff is getting better with this too. So I guess my point there was it's just there's some lag between a technology becoming available and the product becoming kind of fully explored in the space. And I just think that was kind of my way of saying that I think that this is just a very exciting area where there's just going to be a lot of innovation for a long time to come.
So he's excited, all right, but he's excited about hydrofoiling. Okay, that's kind of cool. He's excited about the metaverse. I'm not very excited about that. He's excited. He's easily excited, but I think investors are going to see some return from this AI investment. Certainly that's what the market thinks right now. All right, what's it all mean? One big drill on earnings takeaway. The one number you got to remember from these results that means a whole lot. I'll have that for you right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So here's what you need to know about Facebook's second quarter earnings, which were good. $39.1 billion in revenues, $13.5 billion in profits, sales accelerating, top line growing at 22%. That's all fantastic. But the number everyone's talking about right now is what they've spent in capital expenditures and at what percentage of revenues it is. And the number I want you to remember, $8.5 billion. That's how much they spent in building up property, plant, and equipment in one quarter, in 13 weeks. $8.5 billion from Facebook to build out their capacity in AI. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And of course, check us out on X at Cory TV and Drill Down Pod on TikTok and Instagram, and all of our earnings reports and lots more at the 6.5 Media page on YouTube. Leave us some comments. Tell us what you think. Tell us what you'd like to see. Drill Down Earnings, part of 6.5 Media.